All right. Well, good morning, everyone. Thank you for attending the financial reporting workshop for the Illinois Works Pre-Apprenticeship Program. We are kind of excited to continue this messaging. We actually presented it during the January administrators onboarding meeting, and so we're presenting it to a little bit wider of an audience today. Obviously, we're going to record this and put it up on our partner guide for everyone to review, and so hopefully it'll be very helpful as we move forward. Um, go ahead and introduce myself. My name is Dan Martinez. I'm the Senior Program Manager for the Illinois Works Pre-Apprenticeship Program. I've been with the program since very late 2022, which was its first year. And I've worked both as a programmatic grant manager, as a financial grant manager, and now as the senior program manager. I'm really excited to implement this workshop and discuss it with everyone, because our goal is really to assist all of you in facilitating the financial reporting and having it move through as quickly as possible. So with me today is Robin Hovey. He's the financial grant manager. Robin, would you like to introduce yourself?
Thank you, Dan. Welcome, everyone. I'm looking forward to working with you on the 2026 reporting, and some of you I've been working with on prior year reports as we try to get prior year grants closed out. So I think this is a great way to communicate directly with the people that are doing the work, and I really appreciate Dan directing this and making this happen for us in the program year. So looking forward to hearing from you and some of your questions, and looking forward to meeting a lot of you. Thanks, Dan.
Perfect. Well, thank you, Robin. And I know a lot of times we kind of pause for, uh, you know, all of you to introduce yourselves. I want to be respectful of everyone's time. There may be a lot of content and questions. So what I'd ask that you do is in the chat, go ahead and place your name, the grant organization you're with, and your role, and we will certainly say hello to everyone. We definitely appreciate you being here. One of the reasons we also do that, though, is that we definitely want to give organizations credit for attending. WebEx captures this, but we like to kind of have a secondary confirmation. It's very important. Actually, the topic we're discussing today, one of the main points of financial reporting is protecting grantees as they are audited. And Illinois Works isn't in control of when the state of Illinois and different groups within the state have the ability to audit programs. They can audit grantees, they can audit our program, which is then auditing the grantee as well. And this just makes sure all of our bases are covered. And in fact, they have required grantees to produce evidence of attending our trainings before. And so this is one way we can help ensure that on your behalf. So again, but thank you for attending, and good morning, everyone. So just a quick overview of what we're hoping to accomplish here today. We definitely want to make sure that all of the grantees understand the guidance as it pertains to financial reporting, so that it's consistent among all grantees within the program. Some of you have been with Illinois Works since before me in 2022. Some of you are new this year. This guidance will be standardized for all organizations, and so we are going to be talking about submitting the PPR, which is the periodic performance report, the PFR, which is the periodic financial report, the ledger, and supporting documentation. I always find it interesting because in all documentation within the state, that's typically how it's referred to. It's, the PPR and PFR, ledger and supporting documentation. But in many ways, that's the reverse of how it is actually used. And we'll get into that, but really things start with the supporting documentation. You use that to create or fill out a ledger, and you use that ledger then to make your entries into your periodic financial report. So I just always find that interesting, but we certainly will explain how that all works, what each of those documents are, and and what the requirements are going forward for that. So um, we want you to actively participate. We want to do real-time problem solving if you do have a question. And I sent an email to everyone that was registered as of, well, a certain time this morning. I did see some that kept coming through, but so you might not have the email that I sent this morning, but I did send a generic ledger that organizations can use maybe during this session, or at least reference during this session. So again, the objectives, we want you to understand those PPRs, PFRs, ledgers, and supporting documentation. We want you to understand what documentation is required for each of the expense categories. And by expense categories, we mean those things from your budget, such as, personnel, travel, supplies, and then, occupancy, miscellaneous. And we want you to understand, because each of those do have slightly different required documentations. We want you to understand, how to complete the ledger accurately and consistently, and to ensure that they align with all of that supporting documentation. We're going to discuss a couple of the common flags that we wind up seeing, and how to make sure that, we can avoid those and avoid the delays. And then discuss a little bit about the best practices for how to submit the financial documentation as it's due. So let's get started. I mentioned that we're standardizing this. This is something that was not just developed by the Office of Illinois Works. Actually, DCEO has been, over the last year and a half, maybe 2 years, has been standardizing the financial reporting across all programs. And as some of you may know, or maybe remember, if it happened to you, you were part of your financial reporting was actually done through a different office within DCEO. It's called the Office of Grants Management. And the way they were operating in 2022 is very different from how they're operating in 2026. And so some of this guidance is really updating you to even what they're doing in 2026, and ensuring that everyone is following that DCEO policy. I mentioned that this is also to protect grantees, right? We need to be, you know, we need to be confident that your program could pass an audit. And we have worked with several grantees over the last, 4 years, where we've tried to help them. They've come to us saying, "Hey, I'm being audited by the state. Do you have this? We sent it to you, 3 years ago." So sometimes we do, but sometimes, it was not provided to us. So by making sure we're all doing standardized financial reporting, ensuring that you could pass audits right from the start, where the documentation would actually already be contained within the state of Illinois systems, that's very important to us, and in terms of protecting the grantees. And then certainly, we want to improve the review time and move this through as quickly as possible. So it's going to be very important that all of these guidelines are followed, and we can turn what has been, taking anywhere from, well, it can almost be measured in days to do some grant reviews, and it really should be measured in minutes. So that's the drastic reduction in review time that we're looking to accomplish. In providing a grantee with a response within 30 minutes rather than within 1 or 2 days. So we'll definitely get there with your assistance. We talked about, what makes all of this up, the PPR, the PFR, the ledger, and the supporting documentation. So whenever we're talking about financial reporting, that's really what we are referring to. I'm going to start by talking about the PPR. Now, for all of the grantees, especially the grantees here that are new for 2026, you will receive an email from me or Robin, and it will contain your PPR, PFR, and your ledger. And for organizations that were with us and are operating on the same grant from 2024, 2025, you will receive an updated set of templates. Now, in the meantime, you do have everyone, again, that was registered as of this morning, maybe 8:30, does have that ledger template, and you could at the very least use that to start building things up, and then we can copy and paste over to the ledger that you will receive from our office. But I just want to give you an overview of how these operate and what they look like, especially for those that haven't been with the program before. So the periodic performance report, I like starting with this one because it's super simple. This is an important document. It is required by the state of Illinois, and it identifies, what activities occurred, ensures that they align with the work plan as it's approved and with the grant agreement itself. For the Illinois Works Pre-Apprenticeship Program, however, we utilize IWRS to track your performance on a real-time basis. Most activity that you conduct in your actual cohorts for the pre-apprenticeship training is required to be entered into IWRS, sometimes within 24 hours and definitely within a week. So that is real-time reporting that we get. And so rather than having that completely documented redundantly on a PPR, the middle section of what you can see on your screen here, and actually I'm going to annotate just to call attention to it. You can see here there's a checkbox that says alternative file or database is used. So by checking that box, we're referring to IWRS, and it essentially relieves everyone of the responsibility of fully documenting their activity on the PPR. But as we've said many, many times, IWRS is your PPR. So it has to match. Your PPR and PFR have to match. So if, for example, one of the things, and I'm sure I'll talk about this later, one of the things that is entered into IWRS is attendance, right? So you might say an individual attended the orientation for 4 hours, then the next day they attended an overview of the history of the construction and the trades, for 4 hours, and then the next day was first aid CPR, and on and on. And that first week, they wound up attending 20 hours. That's entered into IWRS, and then the stipend is entered into IWRS. Now that stipend has to be based on those 20 hours. So there's two areas within IWRS that have to align. Furthermore, you wind up uploading your attendance roster, and that has to align with both of those items. And I'm about to steal my own thunder by talking about the PFR, but then the PFR, you're reporting to say, hey, we paid this individual $280 in stipends based on those 20 hours, right? Those all have to align. If you paid that individual, if you submit on your PFR that you paid that individual $300, that doesn't align with the PPR in which you said you paid them a stipend of, $280. So we need to make sure all of that aligns very tightly. And that goes true for stipends, wraparound services, transition services, etc. So again, this is a very quick checkbox. We do have to ensure that the header information is up to date because that does change. The thing basically it's primarily this report date, end date. So typically your PPR is due on a quarterly basis. Everyone has, and I'm sure this is a question on everyone's mind, in terms of their executed 2026 grant agreement. Everyone's grant agreement is in process, with the exception of just a few renewal grants that we're still working through your budget alignment. But everyone, especially the new 2026 grants, all of those budgets were approved and we're moving forward, and all of the grant agreements are in process. So that being said, those generate a schedule of delivery dates, deliverable dates for the PPR and PFR. Your first one will probably be a 4-month. It'll include from January 1st to the end of April. And so you'll have to, make sure that the report end date is never prior to the end of that period, right? We can't say that the report end date is, April 22nd on this, but it actually goes until April, was it 31st? Is there 31 days in this month? So that's always something to keep in mind. But other than that, it's a very simple form to fill out. So any questions on the PPR before I continue, since I know I've been talking already for a good 20 minutes here? I don't hear anything. If someone has a question that they didn't place in the chat, if you want to unmute yourself, you can and go ahead and ask the question.
I didn't put it in the chat. This is Cheryl Holman. But I'm wondering, you're saying the first one is January through April, or that was an example, if it's on a quarterly basis?
So, yeah, that's a good question. So to clarify that, so there are, it's typically due on a quarterly basis, the PPR. The exception will be the very first one. The very first PPR has to coincide with the execution or the obligation of your grant agreement for 2026. So everyone's grant agreement began January 1st, 2026. But as they are obligated, we cannot, and it wouldn't be fair to grantees, we cannot say, okay, well, your first set of reports are due, to include, January 1st to March 31st when you don't have your grant agreement yet, right? We can't start requiring reporting until that grant agreement is obligated. So since we expect everyone's grant agreement to be obligated in May, that will then give you the opportunity to report January 1st through April 30th. So that'll be the first reporting period for, I believe, just about everybody on this call. And then we will retain the quarterly for the PRs. So then your next reporting set would be May and June. Obviously, April is in that second quarter, but it was already taken care of as part of that initial reporting. The third PPR will be July, August, and September, and it will be due somewhere like October 30th. And then the fourth PFR or PPR for the year will be October, November, and December. Thank you for helping me clarify that, Cheryl. Any other questions?
So I have a question, Tony from Bethel Family Resource. So for our deliverables, since everything is in IWRS, do we just paraphrase everything that went in that time period? Or do we just say C, C IWRS?
You just check that box.
And we're done.
And well, again, the header is, for the most part, doesn't change, right? So this is all filled out kind of, I almost say one time. Your name, your grant number, all this information doesn't change each time. For the most part, throughout the year, your grant agreement period doesn't change. Certainly the name of the pre-apprenticeship program doesn't change. Those things don't change. It'll, again, the PPR will remain on a quarterly basis the entire time, so that doesn't change. What will change is the report period end date and your prepared date. This will always be marked as is it the final report? No, not until we actually close the grant will that be a final report. So none of that changes, but except for, again, the report period end date, that'll constantly move. Like I said, the first one will be which should probably say April 30th. The second one will say June 30th. The third one will say September 31st. And then the fourth and final, the fourth one for 2026 will say December 31st. Obviously 2026 for all of those. The prepared date, this was another one that I was kind of flagging in terms of, I'm going to get rid of all those because I'm starting to make the screen really messy. The prepared date can never be prior to that report end date. So we can't say, okay, well, we're just going to do this work in advance. That's kind of like backdating a signature. That's not allowed. We have to make sure that it's not prepared before the end date.
Okay.
But other than that, other than just those couple things from the header, you're checking that box, and then there's a final page saying, okay, who filled this out? And it has to be the authorized signatory or designee.
Okay, thanks for clarifying.
Yes.
So do we have 30 days from the end date to turn in the report?
Yes. And again, you'll receive that in your, the grant agreement itself will have your schedule of deliverables. All right. Any other questions about the PPR? We'll move on. So then the PFR. This is really a summary of, the ledger. I always say that you start with your supporting documentation, you use that to fill out your ledger, then you use your ledger to fill out the PFR. It'll be organized by the budget category. So the categories that you have selected in your budget. I mentioned that all of the 2026 NOFO budgets have been approved. They're in process to execute and obligate your grant agreements. So those were all set. Some of you may have had equipment, some may not. So that'll depend on what's on this PFR, based on what's on that budget category. In a similar way to the PPR, much of the header does not change. So these are kind of filled out one time, and they're not adjusted again. What does get adjusted, of course, is that date prepared, and in a similar manner, it cannot be before the last day of that reporting period. So this is something that would be changed each time. It would be the report period would be changed each time, and then the date prepared. And then, of course, what you're actually filling out is primarily is this current period grant expense. And you're just taking the totals for each category, the totals for personnel, totals for fringe, the totals for travel for a given reporting period, and entering it into each one of the rows, the corresponding budget categories. But again, it's a simple matter of moving those totals from the ledger to the PFR, but it's the ledger that takes time to build. Any questions about this?
Dan, I do have a question. So, is there any point we can use the grant expense adjustment column? Say we have expenses that need to be backed out or um, something like that. Can we use that grant expense adjustment column?
Yeah. So what that's for, and let me walk through the different columns here. So first of all, this will be filled out for you. This is your approved budget amount, and these can't change, right? These are, well, they can change with a new grant agreement, a modified grant agreement. They'll change that budget amount. But so that those will be entered for you, and those don't change. This is a formula, and this is a formula, so you don't touch those. They're basically, looking at the approved budget, and they're subtracting the grant expenditures, and that's how you're getting those, the remaining balance that's available, and it's doing a percentage calculation of how much you've spent on that third column there. So really, what you're filling out is, especially the first time, there are no prior approved grant expenses for a brand new grant, right? So there wouldn't be anything here on a brand new grant. So you would just be looking at the current grant period expenses from your ledger. So for each category, say personnel, we'd be talking about January 1st through April 30th. And you'd be entering those in as a lump sum amount. Then your next PFR, and these are done on a monthly basis. After the first one, right? Then they're monthly. So the next PFR, the reporting period, would be May 1st to May 31st. And what you would do is then from the January 1st to the April PFR, you would then move that, excuse me, let me use this one. You would have the total amount that was approved, right? So again, January to April, you would just have this, and there wouldn't be anything here or here. So the post adjustment amount, that's how much of expenses we certified for you. And you do have to wait for us to certify them, right? You send this in, we certify them and send it back to you. And that this is then your certified amount from January 1st to April 30th. Then in the May PFR, what you do is you take that amount and you move it to the prior. You do that every month, right? The previous reporting period, you move to the prior. And then the current period expenses, that would then be May. These would be the new ones you enter for May. So now, to get to your question, the grant expense adjustment would be if you all of a sudden found a receipt for something that you paid in, say, February, and you found it now in May. The only thing that can go in this column here, current grant period expenses, are expenses that occurred within that May reporting period. And you cannot enter anything directly in here because these were the already approved expenses. So the only place you can enter that expense from February is in this grant adjustment column. And essentially what that allows us to do is recognize, okay, you know, had that receipt from January or February. You either didn't have it at the time, or you had it but forgot, and you didn't enter it in during the proper reporting period. So now you're entering it in, and it just allows us to flag that and but still include it in your certified expenses. We will denote that on the ledger as well, saying that this is an adjustment expense for that given reporting period. Because what we don't do on the ledger is go back and modify something. So it's not like you can go and insert that into the row where maybe it would have gone had you had that receipt back in February. We're not allowed to do that. Once those rows are certified, all you can do is add you know, comments to new rows. So you would add that expense in, and it would show February along with all of the May expenses, but it would also say adjustment. All right, any questions? All right, perfect. So again, this will be fairly easy to fill out once the ledger is set up. So we look at the ledger. I can't stress this enough. This is, you know, this is the backbone of your financial reporting. It provides the exact detail of the expenses. And you know, our job is to ensure that all of the expenses align with the scope of the pre-apprenticeship program, that they're allowed by state and you know, GATA and you know, grant management rules, that they're part of the approved budget, and that they align with the Illinois Works 2026 grantee manual. So these are essentially the same rows that you would see in the PFR. And so in a very similar sense, we have that same approved budget, and then we have the total. And these need to align with the PFR. They always must align with the PFR. This first page of your ledger is really just you don't enter anything on here. It's a summary page, and each of these cells has a formula to look into each one of these tabs. So again, this is just a summary page. There's nothing for you to fill out here. As you fill out each one of these tabs, it will then fill out this summary page for you. So here are some things about the ledger that are really important to understand and know. The first is, as we go to each one of these tabs, it's really important to utilize an invoice number. All of the row or columns within the ledger need to be filled out. So if your expense does not have a an invoice number, something like, what's an example of something that might not have an invoice number? Well, let's just say, you know, some lumber was purchased, and the receipt, it does have a transaction number, but it's like a, you know, 14-digit long just string of numbers and characters. It's not really an invoice number. You can use your own invoice number, and what we suggest there is if that's under supplies, which I think was 1005. So you would want to put like 1005 dash, you know, 1. And then on the ledger, on that receipt, before you scan it in as a PDF, you could write 100-1 on it. Those are tied directly. Going a step further, on the bank statement or credit card statement, on that line entry, you would write 1001. that's how we move from taking days to review each grantee's financial reporting to minutes. Something like that allows us to do those verifications very quickly, right? We look at the check number or credit card number. And in this example, it says check number. I think on the example that I sent all of you and the one we're using for 2026 says check or credit card number or something like that. What we want to see are the last four digits. If it's a credit card, last four digits of the credit card, because some organizations use multiple credit cards. So we're getting multiple credit card statements. That helps us go to the correct credit card statement. The date, that's the date, typically, almost always, that the funds cleared the bank. So the reason that is important is because I'm going to use a check as an example. If you write a check in February and then it doesn't get cashed until June, it will appear obviously on your June bank statement. That is where we will go to verify that expense. So that check, that expense could not be entered into the ledger until you have your June bank statement in hand. Again, what you're doing is you're starting with the receipt and the bank statement, and then you're adding them to the ledger. So those expenses aren't certifiable and until we see that that bank statement. So that's the date that we would be looking for. The check amount or the credit card amount or ACH amount, that's the total amount. So if you purchased lumber and you had a $500 lumber expense, and it was for two different programs, the Illinois Works Pre-Apprenticeship Program and some other construction program that you're running under a different grant at your organization. And maybe it was 50-50. $250 was for Illinois Works, $250 was for this other program. The check amount or credit card amount would show 500, right? So that would be 500 here. The amount charged to the grant, this would be the 250. So one of the things we see very often is that they put, the 250 here and they put the 250 here. And then we can't find, the receipt or the bank statement to show that that $250 expense, because we should have been looking for a $500 one. So it's very important to make sure that you are putting the correct amount here. This amount can always be higher than this amount, right? You can go to the lumber yard and buy $500 worth of lumber and only charge our grant $50. But you cannot charge our grant $500 on a $50 purchase of lumber. So it doesn't work the other way, but it does work in one direction there. All right. Any questions about this before I move on?
Yes, Dan, I do have a couple questions. So in regards to the check amount, say it's a credit card charge for $50. Do you want the check amount to be the amount that was paid on the credit card? Because for our organization, we have multiple credit cards and it's paid on one singular statement. So is that the amount you'd want under the check amount?
No, it'd be the credit card transaction.
Just the individual transaction. And then also for the date of invoice for a credit card charge, would you want the date on the receipt or like the specific invoice, or do you want the date it was posted on a credit card statement?
And that's why I had hedged actually when I said it's almost always the date that it appears on the statement, because yeah, in that case, we can take the date on the receipt because it's almost very often it's the same day. It does show up on the credit card statement. Maybe it'll be the next day, but it simplifies everything to use the receipt date. If there's some sort of anomaly where you have a receipt that shows, um, you know, February, and it doesn't post to your credit card statement until May, well, then we're going to have to, make a change there. We wouldn't actually be able to put it until the May statement, and we'd probably need a note explaining what occurred there. But credit cards I haven't seen that with a credit card. You only see that typically with checks. So it's checks that we really have to be cautious about. But credit cards, we can use the date of the credit card. Robin, do you have any thoughts on that?
I do not, as long as they reconcile locally that it's included in the statement that they send as a supporting document. Um, they should take it out, because if the purchase was at the last day of the month and then it doesn't get posted to the credit card and it's not in the credit card bill that you get for some reason, you're going to have to check that, because we won't have that
Right.
trailing month statement. So that's the only thing I would caution them on when you get down to the very last days of the month, and credit card usage occurs and it doesn't get processed, and then it doesn't appear in the next statement because of whatever the cutoff date is. Maybe it's the 27th or 28th of the month. So just be cautious in that regard and make sure the ledger only has a posting for what you have the supporting documentation for.
Thank you, Robin. That's an excellent point. Yeah, that last day, those cutoff days do start to complicate things. And again, we haven't fully gotten into it yet. We're still explaining the basics of the documents themselves. But to make an entry onto the ledger, you have to have those documents in your hand. The proof of expense, which is the receipt or the invoice, and the proof of payment, which is the credit card statement or the bank statement. So if they're not in your hand, if they're not part of that reporting period, then that entry doesn't go on the ledger yet. So any other questions before we continue sharing information on this? Oop.
I have a question. This is Cheryl. So you're asking for, would it be a good practice to have the bank statement and the invoice, like say the phone bill that came in? You want both of those, or is it a good practice to have the bank statement?
It is a requirement
To have both?
to have both. And we're about to get to that. We're about to get to that.
That's a lot of paper.
All right. Any other questions?
Hello, I did have one quick question. How are you
Okay.
guys? So my question is actually in regards to the grant agreement. We have all of our supporting documentation and receipts ready to go. However, we have yet to finalize our grant agreement with you all. So I didn't know how to categorize, or if any expenses from January till now could be counted, or what our next steps would be.
Yes. So they will all be counted. As I mentioned at the beginning, you will all receive either a new ledger for the case of grantees that are starting for brand new as of January 1st, 2026, or an updated ledger for those that are continuing on their grant from 2025 or 2024. And you'll be able to document your expenses as of January 1st, 2026 there. And we expect all of the grant agreements to be executed next month, but you can prepare all that documentation now, and that first reporting period will be we expect to be until January 1st, 2026 to April 30th, 2026. So you can compile all that right now and provide that to us as soon as you are ready.
Thank you.
Mhm. So again, the supporting documentation that we're about to discuss, that Cheryl just had a question on, it is required for every expense. It's the primary source of our compliance review. And really amounts to being the most common reason for delays after, or I think that's just before then simple mistakes, but we'll discuss some of those. But we were just talking about this. So the requirement for every single expense is your proof of your expense. So that is your receipt, your invoice. In some cases, like say for travel, that would be the expense report that's submitted by the staff member. So, but we have to see that proof of expense for every line item. The proof of payment, so that's the credit card statement. That's a bank statement, right? So if it's a credit card payment, then we need to see the credit card statement. If it's check, we need to see the bank statement. ACH, we need to see that bank statement. There are some categories, and we're going to follow this up with some supporting material that I'll send out after the workshop today. There are some categories that require an additional documentation. So many of the the straightforward expenses, such as supplies, right? You go get that lumber that I'm overusing as an example. You're going to have a receipt, and you're going to have either a bank statement or a credit card statement as the proof of payment. Nothing else would typically be needed. But other things such as payroll, that requires the time and effort sheet as a third document. In miscellaneous, if they received a bus pass, that requires not only we would need to see the receipt for your purchase of that bus pass, we need to see the proof of payment showing that you purchased the bus pass. We would also then need to see proof of delivery, meaning that the participant then acknowledged receiving that particular bus pass. So we need like a serial number or some sort of reference to show that they received that particular bus pass. And we'll, again, go into those in a little bit more detail. I really just covered the proof of expense. Those are typically receipts or invoices. Payroll records fall into that category of proof of expense. That's kind of the one primary example of an instance in which it doesn't typically, these are third-party receipts or third-party documents, right? A receipt is coming from the vendor or an invoice is coming from the vendor. The payroll record, maybe you're having a payroll company run the payroll, and so those records they are kind of considered third party, but you might be running them internally, and we can still accept those, but we do have to see those payroll records. Proof of payment, that's pretty straightforward. The bank statement, the credit card statement, and some organizations annotate those documents. Those are the really fast ones. Like I said, when right here, kind of in the margin, they write the invoice number. Oh, it's super fast for us to just go through and check all those boxes and say, and approve those expenses. Yeah, sometimes they, highlight them. That's not quite as fast because you're not having that direct link of the invoice number attached to it, but it still helps. And sometimes instead it's the kind of the inverse. Instead of highlighting everything that's not applicable is redacted, and we can work with that as well. So, but those are required for the proof of payment. So I talked about the third type of document that, we have proof of expense and proof of payment for every single line item on the ledger. Some ledger categories require additional documentation, a third piece of documentation. And so payroll requires the time and effort sheet. So this must align, with the pay period. It must support all the payroll charges. We have seen before somebody provide us with a time and effort sheet showing, $1,300, and then the amount charged to the grant is $1,500. Well, that doesn't work out, right? All these things have to align, and it's really your responsibility to make sure that they align before submitting those the financial reporting to us on a monthly basis. So this is typically travel, right? Employee reimbursements. We need to see the expense report. So the expense report would show the date of the travel, the locations, going from, this address to that address, the purpose, what it was for, and then any receipts. If it was mileage, typically they would provide like a Google map showing, here it was 20 miles each way. So it's a 40-mile round trip times, the 70 cents or whatever per mile. And that's how the expense was calculated. Then we would need to see the proof of payment, of course. Sometimes organizations include that in the payroll. So that would be, you could point us to the payroll for that. Sometimes it's a one-off check. So we would then, see that on your, bank statement, as a check. It's important to note, and this is even more so for participants, but we have had instances where organizations have said, well, we don't have any of that. We just paid them cash. Then we can't certify those expenses, right? So organizations should not be operating in cash. It leaves us without being able to fill those buckets, the proof of expense, proof of payment, and other documentation. So, I can't stress that enough. A lot of you might be scratching your head thinking, why I would even bring that up? But again, we have unfortunately had those circumstances, and you really want to use checks or run that through payroll. Stipends. So
Dan, can I ask a question about the travel expenses?
sure.
If we pay with a company credit card, do we have to have the expense report?
No. At that point, you would just have the
Credit card statement?
the credit card statement,
Okay.
and then the receipt.
Okay.
Right.
Thank you.
So if it was a receipt for, say, the hotel bill.
And I have a question too, if I may. My concern and question is mostly related with the share cost that we have. I know that you said that we have to put the date of the invoice and amount charged, the vendor and everything. So we do have this information, but this is on the agency. So let me give you an example: occupancy costs. We have occupancy costs that are related with the whole agency. Those costs are initially charged to a shared cost center, and then at the end of the month, based on the numbers of FTEs per each program that we have, are allocated. So now, what kind of expenses? What kind of proof of expenses would you need for those? Because we are talking about dozens of invoices that may go to the shared cost centers, and at the end of the month, as I said, those expenses are being distributed to each project that we have in the agency based on how many FTEs we have for that particular program.
Yeah, so and some of this we might need to work with you one-on-one, but in a broad sense, allocations are applicable only for certain types of expenses. Occupancy, I mean, you have a very large organization, and allocations for occupancy, as we have noted with various organizations throughout the budget approval process, we can accept allocations there. We've been very clear with organizations that had previously done things like supplies and allocations, that it is okay to budget that way, but you cannot expense that way. We do not allow, and I know it had been done in the past, and it is not allowable anymore to expense supplies on an allocated basis, right? We had instances where there was a $1,000 marketing expense, and the Illinois Works share for that was 15%, $150. Well, there is no proof that any of that marketing work went to Illinois Works. We cannot allow those types of allocations as an expense. Now, if they originally budgeted that way, that's fine. That's how they came to that $150 would be charged to Illinois Works. But only actual marketing work that was documented for Illinois Works could then actually be shown as an expense on the ledger, and then subsequently, of course, the PFR. So going back to your question about what types of documentation would be needed to show an allocation for occupancy, that typically would be no different than simply showing the allocation that the budget was based on, right, which is the personnel side. You had a total of 7.8 FTEs as part of the personnel side of the budget, and so you had allocated 5% of the overall occupancy charges. We would just need to see that. So we'll need to work with you directly to say whether or not your specific supporting documentation is adequate, but we still need to see the expense ultimately, and then we can reference the budget itself for the allocation percentage.
Thank you, Dan.
Thank you.
Hey, Dan, I also had a question. Can you hear me okay?
Yes. Mm-hmm.
You talked about the payroll and the time and effort sheets. Will those documents be good to show for supporting fringe benefit?
Yes.
Okay.
Yes.
That's all. Thank you.
The gold standard for supporting documentation for fringe would additionally be like your quarterly, tax payments. But a lot of times we can utilize the payroll documentation for fringe. But ideally, you definitely, certainly would need to have those if requested to show the actual fringe payments.
Okay.
Any other questions?
Hi, I did have a quick question. When we are supplying like the bank statement or the credit card statement as proof of payment, is it okay to like redact certain information, so like certain transactions, or do you guys prefer just to see everything that's there, including what you are requesting or what we're reporting?
You're welcome to redact it. We definitely don't, if it's non-redacted, we're not looking at anything else. I believe just, I want to throw one note of caution out there. Again, this is not really related to us, but I think in a full audit, they can request an unredacted copy of it. So, but I'm not really sure about that. Again, I'm not an auditor, but I do know we need obviously to see the expenses that you're attributing or charging to the grant. So that's all we really care about. If you redact everything else, that's fine. If you just highlight what we need to see or annotate what we need to see, that's fine too. It's really your preference.
Okay, thank you. That was helpful.
Thank you.
Hi there, this is Maria Stabstawidasia.
Hi.
Can we go back to the time and effort ledger? Is that gonna be monthly or is it gonna be a cumulative time and effort ledger?
Hopefully I'm going to answer this correctly. So the ledger, the ledger and
Ask the question. I
PFR.
gotta go into another meeting. Ask if we can use our timesheets via
I'm sorry.
electronic.
There was a question about electronic timesheets. I'm going to hedge and say probably. If you have a question about it, I would suggest you email Robin and I and ask us if that's sufficient for the proof of expense for payroll.
That's the same
Um,
information.
But going back to Maria's question, so the PFR and the ledger are based on reporting periods. In general, that's a month, right? So the June reporting period it's June 1st, 2026 to June 30th, 2026. And any expenses contained within that on that ledger, and then in the current, what's called the current period on the PFR, would have to have been paid, not incurred, paid during that period. So again, we need to see a bank statement showing that those expenses or credit card statements showing those expenses were paid between June 1st and June 30th. And then the next reporting period would be July 1st to July 31st. So the PFR, the ledger, they're essentially monthly. The exception is the very first one, in which that reporting period, for the most part, will be January 1st, 2026 to April 30th, 2026. We will still need all of the expenses chronologically in the ledger. So April 1st, or I'm sorry, January 1st, January 17th, January 20th, February 2nd, February 8th, again, chronologically within that reporting period. And that holds true for the June reporting period as well, right? On the ledger, a payment or an expense from June 5th goes before an expense from June 9th. They need to be chronological. Did that answer your question, Maria?
Kind of, I'm sorry. My question is when we submit the time and effort ledger, we used to submit it monthly, but then per our conversations, we were supposed to submit it in the same report. It's a cumulative time and effort ledger. So if we already submitted January through March, January through February, so we're going to submit March and April 30th. So that the time and effort ledger, it should contain January, February, and March in the same report. Am I correct or not?
Well, I'm going to take one more stab at this, and then we'll maybe need to answer your question, offline one-on-one. But
thank you.
In terms of this, especially this first report, because again, it will it spans multiple months. You can submit, like January You can then, have a PDF of just January, a PDF of just February, a PDF of just March, and a PDF of just April for, say, your personnel. We're not saying that you have to merge those documents together or combine them in any way, but they get submitted, essentially, and they'll be reviewed together. Whereas, once we're in a normal cycle for 2026, like I said, your June documentation and your July documentation cannot be submitted together. Those will need to be separate.
Thank you.
Okay. Stipends. So it's very important that that participants sign off an acknowledgement of their receipt of their stipends. And this was really common when participants all received checks, and then some organizations stopped doing it as they moved to direct deposit for stipend payments. But it's essential that we see that the participant is acknowledging not only the receipt of that total in this example. Again, the screenshot or what you're seeing on the screen, these are just AI generated images, so they might even have a hallucination or two in there, but we don't want to just see David Martinez signing off for $460. He needs to see or recognize any deductions that he has, right? Or why is it that it's only $460 instead of the $540 that he was expecting, or what have you. So it serves multiple purposes there. Not only does it keep the participant engaged and understanding that that their activity has meaningful impact, and it's why they're receiving their stipend. The other side of that coin is that poor activity has meaningful impact and it reduces their stipend. But this helps everyone because, again, I mentioned before that IWRS is your PPR, and ultimately the attendance hours from your attendance rosters have to match the stipend calculations. And we were finding that they weren't, and that organizations struggled to answer the question of, well, how did you come up with paying this individual $460? They really struggled with that, right? And if they're struggling with it, then certainly David Martinez would have no idea why he received a stipend payment of $460. So this is an essential requirement for grants going forward. Any questions about this type of additional documentation?
Dan, I have a question. We do direct deposit, and I do have a form similar to this that I have the participant sign. My question is, if a participant is dismissed or no longer with the program, but our payroll is behind and they haven't so they have one last final timesheet that we couldn't get a signature from because either they quit coming or they were dismissed for whatever reason. What do we do in that situation?
So you would still want to prepare the this type of document, and then since the participant can't sign it, the staff would sign it and write the explanation right there. We do understand that very often that last stipend payment, even for graduates, right, might occur the day after they walk out of your doors having graduated for the last time, and getting them to come back in and say, hey, can you sign for that direct deposit that we sent you? A lot of times they won't do it. So we do understand that, and you can make that explanation, but every effort should be made to have them come back and sign for the stipend that they did receive.
Thank you.
No, thank you. It's a great question. Okay.
There are no other questions in the chat, Dan.
Oh, okay. Let's go ahead. Oh, you said there are no others?
None.
Okay. Okay, great. So in a very similar manner, and this really falls under all of our miscellaneous expenses, which are highly scrutinized by our Office of Accountability and our internal audit group. So we also need to verify that any barrier reduction expenses that the participant acknowledges having received them, that could be, because you contributed, $200 toward childcare. It could be because, you had a $300 car repair, or in this case, because of a bus card. You can see that in this case, we would expect the image of the bus card showing the serial number. A lot of times there's a barcode on the back. You could do that, but our Office of Accountability, point blank has said, well, how can you be sure? Okay, you have you have a receipt for a $20 gas card, and you have a credit card statement or a bank statement showing that $20 gas card was purchased by the organization, but how do you know the participant received it? Right. So this answers that question. And then, how do you know that the participant received that exact gas card from that receipt? Well, again, then this answers that question. So this is a requirement that we are being essentially required to ensure that it's part of the financial reporting for any expenses. Particularly, again, this is wraparound services, which a bus pass or child care support would be part of. It's also true for transition services, such as providing, a registered apprenticeship program application fee, or an initiation fee if they actually get into a USDOL registered apprenticeship program. Support like that has to be documented in this manner. And it does need to align with IWRS. So IWRS for wraparound services, student support services, and transition services has an entry for, say, transportation assistance for the dollar of the value of the service. So this hypothetical example here of Sarah Johnson, IWRS would have to show a successful completion of transportation assistance valuing $20 as a gas card in IWRS if you're going to provide that expense in your ledger and PFR. Any questions about needing to have a form like this that the participants sign acknowledging when they receive transition services, wraparound services, or student support services?
Hi, Dan. I have one question about the stipend acknowledgement.
Mhm.
So, is the acknowledgement required per stipend throughout the program, or could there be one acknowledgement at the end of the cohort that acknowledges each stipend pay period they received?
It's per stipend payment because the stipend payments are required every week, weekly or biweekly. And presumably you want to expense them weekly or bi-weekly, or, on each month reporting period to the state. So if we're going to see that on your expense report, we need to see the stipend acknowledgement of that line item.
Okay, thank you.
Dan, this is Carrie. I have a quick question. You just mentioned gas cards, but I thought we weren't allowed to give gas cards this year.
Oh, Did I mention gas cards?
You said gas card, so that's why I wanted to verify
Nope.
that didn't.
Yeah, we definitely aren't allowed to do gas cards.
Okay.
I,
just
I
checking.
meant bus cards.
Okay, thank you.
Yeah. Yes, that gas cards we are not allowed to have as part of our grant anymore. So for those of you that are new to in the program in 2026, previously we did allow organizations to provide transportation assistance to participants with gas cards, but we are no longer able to do that.
Dan, I
Great.
have two questions about the bus passes. One is like, I buy the passes in bulk because I buy dollar bus passes because I've found that if I give them a monthly card, they may not come back. So I give them like enough bus passes to get them back and forth for the week and they sign for it, but I buy them in bulk. So how would I expense that? Like if I bought $75 worth of bus tickets in January, but I dispersed them and I have documentation of when I gave them out, throughout the program, how do I expense that?
So yeah, that's a good question. Buying in bulk, and there's different definitions of bulk. We've had programs buy things in bulk for $50 or $75. We've had programs buy things in bulk for $1,500, and there is a risk to that. The first thing to be sure is that everything has to be within the program year. So what you wouldn't want to do is buy so much that you can't use it within this program year and then want to use it next program year, because then you're having a prior incurred cost for 2027, which the program doesn't support. So that's something just to be mindful of, that organizations, you need to be careful because you can't overbuy. So that's the first comment I would have on it. But then the other thing is that unless, again, it can't go on the ledger unless you have all of the documentation to support it. So if an organization bought $75 in bus passes in January, they have the receipt that's dated in January, and they have their credit card statement or bank statement that's dated in January, but they don't have a participant acknowledgement form in January. Their cohort doesn't start until May. Well, then in May, when they actually hand out that bus pass and the person signs for it, the expense can now go in the May reporting period, May 1st to May 31st, 2026. It'll have to go in as an adjustment because the payment should reflects January. So it'll just go in as adjustment. Again, there's nothing scary or it's still allowed. It's a full expense, certified expense. It just acknowledges the fact that the payment date is not within that May date. But until you have all three of those pieces of documentation, the expense cannot be itemized.
Okay, thank you. My second question is, if we purchase gas cards and give it to the participants, knowing that it is not approved expense, but we're choosing to do that, is that something we still need to document in the IWRS, even though we know we're not going to be reimbursed for it?
No, so a lot of organizations have other grant programs or donor funder streams that they may do all sorts of other supports for their participants, and that's great, that's wonderful. It doesn't have anything to do with our program. It doesn't need to, it wouldn't show up in IWRS. It wouldn't show up on the ledger or PFR. I will, one last thing about barrier reduction as it does pertain to the Illinois Works grant, again, I just want to really stress that wraparound services in particular, so bus passes in this case, but all of them are opt-in. All of the wraparound services have to be opt-in. So one of the things that we had unfortunately seen some organizations do is that they provided everyone in the class with a bus pass, whether they asked for it or not. And that's just not appropriate. And it has triggered investigations when we have determined that everyone was receiving the wraparound service. So just be cautious of that. All right. Any other questions?
Yes, I have a question. This may have been discussed earlier, but just like confirm. It's new for the first
I'm
time.
sorry. Can you speak up? I can barely hear you.
Can you hear me now?
It's still very soft, but yes, I can hear you.
Okay. So I'm not sure if this was discussed earlier or not, but was wondering, do you have or have provided a list of allowable and not allowable expenses for the grant? I know we talked about gas cards not being allowed on this conversation a few times, but just trying to make sure there's a list of that's existing that allows people to know that ahead of time when they start expensing for these items for reimbursement.
Yes, that is in the grantee manual.
Okay.
Those allowable pre-approved expenses, which brings up another concept. And I think it's the next. No, it's somewhere in here. We'll get to it. But if it's not a wraparound expense or student sports expense or transition service expense that's clearly identified in the grantee manual, then the other piece of documentation that would be needed would be the pre-approval from the programmatic grant manager. So I'm just going to use a really kind of off the wall example. This has never come up. And again, this is purely hypothetical. But let's say a participant needed a haircut for an interview. That's not in the grantee manual. I don't know that it would be approved programmatically. Maybe it would, maybe it wouldn't. But if an organization reaches out to their grant manager and explains the situation, and they approve it, the grant manager sends back an email saying, "Yep, that expense is approved." That would need to be part of the documentation that is sent with your financial reporting, because as your financial grant manager goes through that ledger and they see the expense, bus pass, X amount, they see the three pieces of documentation, the receipt, the proof of payment, and the participant acknowledgement. Great, they approve that. Next line item, they see haircut. All right, well, that's a new one. So they're going to look for the receipt. They're going to look for the proof of payment. They're going to look for the participant acknowledgement saying, yes, I received this haircut for this reason. Thank you. And then they're also going to look for the PDF of the email from the programmatic grant manager saying that that was an approved expense. All right. Any other questions? Oh, and I guess I do have that. That's what this line was right here. The pre-approval is required if it's not in the grantee manual. All right. So in organizing the supporting documentation, really what we need to see is a single PDF per category. So you have, and personnel and fringe, I think we addressed that earlier. Those can really be together. So 1001, personnel 1002, fringe, that would be one PDF. 1003, travel, that'd be another PDF containing, the proof of expenses, the proof of payments, and any other documentation that certain ones require, like a expense report. The exception to that is that sometimes the proof of payment in terms of the bank statement, credit card statement, that comes on its own category, its own PDF. So some organizations don't include that in each of the individual, travel, supplies, occupancy, instead of, including the bank statement, like, in each of those categories, they just provide the bank statement separately. But again, annotating it helps to understand which category each line is pertaining to. But I mentioned that because we have received just one PDF for everything, 250 pages long, and like the computers just struggle to deal with it. So we do need those broken up into categories rather than a single 250 page PDF. The PDFs have to be organized in the same chronological order that the expenses appear on the ledger, right? So just like I went through and I said on the ledger, it's, January 5th, January 10th, February 2nd. We can't have it open a PDF and all of a sudden, the first one is the February 2nd one, and the second item is, May, or I'm sorry, April, 12th, and then it goes back to January. Just have them in chronological order. It streamlines that entire process, and it has to match the ledger. So we already covered this quite a bit, but they are due per the grant agreement. In general, the PFRs, the ledgers and supporting documents, are due on a monthly basis. The PPRs are due on a quarterly basis. The one exception is this very first one, which will be a little bit more than, the quarter for the PFR, and obviously more than the monthly for the, more than the quarter for the PPR, a little bit more than the monthly for the PFR. It'll be January 1st till April 30th. All of the reports will now need to be submitted via a OneDrive. It's a secure State of Illinois OneDrive folder that each grant will receive access to, each organization will receive access to. And we will be emailing you instructions. We'll be emailing you the PPR template, the PFR template, and the ledger template for your specific grant. We will also have instructions regarding that OneDrive. We will need to provide access to the OneDrive for individuals. And the reason we are moving to this is because we have and will have multiple financial grant managers that will access those documents to review them for your organization. And so obviously, you know how it all works. Like if you just submit it to me, then it's in my email, and Robin doesn't have access to it. If you submit it to Robin, then I don't have access to it. If you submit it to both, then neither of us look at it because we assume the other guy's doing it, right? But so this is a process that we're standardizing. All financial reporting will need to be submitted via OneDrive. And so for some of you, that may mean resubmitting your January through March reporting, but we'll take that on a case-by-case basis. In some cases, you might need to resubmit your reporting to adhere to the examples or the requirements that we have just discussed. So, any questions about that?
Yes. So if you've been submitting like January through February, should we submit March or should we wait until the new one comes out?
So, if you adhered to all of the requirements of this, then I'd say just go ahead and submit it because you're in compliance with everything so far, and it should be a very simple matter for us to move things over. If things need to be changed anyway, then obviously it's just going to make sense to consolidate. As we review them, we may need to consolidate some things anyway. It depends on how our Office of Accountability accepts that once we have those grant agreements obligated. But I would say in the short term, just go ahead and submit it, but with that caveat. Any other questions?
There are no other questions in the chat, Dan.
Okay. So I just want you to know that we're going to do a little bit of, we're going to move away from the PowerPoint. I think this goes until noon. So we're going to move, no, the OneDrive instructions have not been sent. We're going to move away from the PowerPoint. But so just to wrap this up, you know, every expense on the ledger, you have to have the proof of payment and proof of expense ready to go with to be submitted with that ledger. And the expenses go on the reporting period that the proof of the payment indicates. So I know that's different than many organizations work with their accounting systems, but you know, ours has to adhere to those dates. And the example that I give is that if you write a check in February and that check is not cashed until June, the expense cannot go on the your ledger in PFR until the June period in which you have the bank statement showing that that check was cashed. If the check is never cashed, it can never be expensed and reimbursed, because this is a reimbursement grant. The funds actually never left your account, and we can't reimburse you for something like that. So that's the key to keep in mind. Let's see here. So, all right, this is really my last slide before I move over to the actual spreadsheet. But I'll leave this up for just a moment and maybe take a couple of extra questions. DCEO does have a website for grantees. They have a lot of videos. There's one I definitely recommend everyone view on auditing. They do have one on financial reporting, I believe. And that's just the general DCEO guidance and explanation of things. But if you haven't watched the audit video, if you're new to grants and the state of Illinois, you definitely want to be cognizant of the audit requirements that your program must submit to the state and or through the federal audit portal. All right. So any questions before we move away from the PowerPoint? Okay. So I'm going to stop sharing here for a moment. Let's see, how do I get into that?
Oh,
Yes, did you have a question?
yes, I do have one final question. So I'm pretty clear on our reporting standards and supporting documentation. I wanted to ask, would it be the same process for if we have, let's say, like for our funding from January to April, we did like a small loan or needing to do a reimbursement. Would it be the same process where we provide all of the supporting documentation along with our bank records and stuff?
Regarding a loan?
Yes, or reimbursement.
So I'm not sure if this is going to answer your question.
Mhm.
The only thing you can be reimbursed on are expenses that were part of your budget, which are now part of your grant agreement.
Yes.
I don't believe there's any organization that has a loan as part of their budgets. So there's nothing that would be expensed as part of a loan.
Okay, I'm sorry, maybe I misspoke then. In regards to any things for reimbursement that align with our grant agreement.
I'm sorry, so what's the question?
For if there were any expenses where we will need to issue reimbursement to someone.
So say a staff member traveled
Yeah.
and stayed in a hotel.
Exactly.
So now they have an expense report.
Yeah.
That's part of your travel, right?
Mm-hmm.
You would submit their hotel receipt. You'd submit the proof of the payment that you provided to them.
Okay.
And their expense report.
Okay, we should be good on that. We have those things.
Okay.
Thank you.
All right, so I'm going to walk through an example, and I'll send this out. This was provided in paper back in January, but I'm going to send this out to everyone that attended the meeting electronically. And these are just some examples of supporting documentation. Just again, some very made up just to illustrate what we're looking for. So I mentioned that we would want individual PDFs, not a single gigantic one. So very often we would receive a PDF of the bank statement, right? So that would be one PDF, especially right now when we're looking at January, February, March, April. You could put them all together chronologically. You could have them separated. That would be fine as well. We mentioned highlighting or annotating. You can see, probably not because this is super small. It helps to annotate with the invoice number, alongside each of the transactions. Then we get into proof of expense. Again, this would be its own PDF for, say, 1001 and 1002 payroll and fringe, if you have it. And this would be something, this is just a just generic grab from the internet there, a payroll summary so that we can see, for each, for each employee that's part of the grant. Obviously, we'd want the full name there, but there's their gross pay, $270. It breaks down their net pay, but that way we can see sometimes the transaction, if that's coming directly as like an ACH out of your bank account, we would expect to see that $2,351.70. But often we see a lump sum payment to a payroll processing, and as long as it exceeds, so we might see something like this amount as a lump sum paid out, and then we would be able to verify, okay, Sandra's payment, her wage was kind of part of that. Then of course we have some fringe here, the employer side of the expenses. And then we have the time and effort that would allow us to say, okay, well, here we have $1,600 worth of time and effort for that pay period. Now, I believe this is going to be a little bit more than what we would see. So if we look at the ledger, then we can then build from that example. Here we have an employee ID for the pay period, January 1st through January 31st, the amount that's being charged to the grant, and then the actual check date, You notice that that check date is, within this reporting period. Again, this was a monthly reporting period. Your reporting periods, would look like that, for all of your, initial entries. But in typical examples, it would just be that 1 month of reporting period, but the check date is within that period. And then on the bank statement, again, it's on the January bank statement. If this wasn't ACH and it was a paper check and it was written on 1/31, then it probably wouldn't be cashed until February, and so it would not be able to be on that reporting period. So any questions about that, about how this gets filled out? Again, each of these columns are filled out. There is a notes column that's typically for our office to flag things, ask questions, or confirm that the expense is approved. That would also be where we would mark something as an adjustment. We might, if that was necessary, but in this case, it's not. Any questions about this? Okay. I'm going to go back to the supporting documentation. I want to go to, I'm going to skip over travel for a second, go to supplies. So here we have an invoice for supplies. It indicates that it was paid with check 4013. It's for lumber, totaling $810. So again, in order to put this on the ledger, we would need to see that the proof of, this is the proof of expense. We would also need to see the proof of payment. So it would have to show on the bank statement or credit card statement. I think I said this was a check, right? So this would be on a bank statement showing that check was cashed on the January statement as well. So if we look at the ledger, so here's what we would see. We'd see, invoice number 115. Again, that corresponds back to the actual invoice number here. I think it's 116 is the date. Let's go back to that. So date of the invoice is 116. The amount charged to the grant is $810, and the vendor is Springfield Construction Supplies. So again, that's all pretty straightforward. It's coming right from here. Here we have the Springfield Construction Supplies is the name of the vendor. The $810. Everything is straightforward there. The next one, the next column is where I really want to everyone to pay some attention here. So the description of work, the first 3 words in this example, the first 3 words where we're getting this is from the budget. So if we look at the budget, oops, didn't come over all the way. So if we look at the budget, here's the budget. These are the categories of expenses that, in this hypothetical example, the grant can have. So the expenses or the description have to start with these words, right? If it was NCCR core workbooks, then the description of work would start with NCCER core workbooks. And then you would put 1 or 2 words explaining what, or 3, right? Explaining what this is. Maybe this would be for cohort 1. Similarly, if you had an expense for tools, right? So then we would have tools, hammer, or maybe these are hand tools, including hammers and screwdrivers. So the key here again is that the first words are coming from your budget. We can't just have fasteners. What, I don't know what that's, where in the budget, right? Would that be coming from? Is that part of the miscellaneous training and office supplies? Is it coming from tools? Is it part of PPE? Are they the harness fasteners for their belt? Or are they part of the lab equipment to go along with the lumber and you know, fastening a bridge? So you need to first identify the line item from the budget, and then you can put the description there. Any questions about that? It is important because your budget is not simply a matter of this total, right? It's not even a matter of the line item total. It really does come down to each of these categories. Oh, wrong. To each of these categories. So, you know, the budget itself might be $500,000. The, you know, the budget for supplies might be $27,000, but, you know, you cannot spend more than $3,000 on construction lab equipment. So when you expense items, we have to identify what it is that you're from the budget that you're purchasing, and then identify a little bit further what that is. So any questions about that description of work? All right, and then we move over to the check number, credit card statement, could be ACH. In this case, it's the check number could be the last, you know, four of the credit card account number, and then the date, the amount, and the report period. So again, in order to enter something on the ledger, you start with your supporting documentation. If you have all the supporting documentation, it can go on the ledger. If you don't, it can't go on the ledger yet. If it needs to wait until the next reporting period, and then it can go on the ledger. In some cases, if the payment date had already passed, then it just goes on as an adjustment. Simply a flag to us to let us know, hey, we need to look at a previous bank statement, not the current reporting period bank statement. Another thing that, two things that I want to critically point out. We have another 10 minutes here. Payments cannot be made directly to participants. I know we're on supplies here, but we literally have seen it where they've listed a participant that they bought, I don't know, you know, office supplies for, or that the participant bought the office supplies for the organization, they're paying them back. It's not allowed, right? You can't do that. You cannot make payments other than stipends directly to a participant. Obviously, that's most commonly in the miscellaneous. So we had talked pretty extensively about wraparound services like bus passes, or child care assistance, or car repairs. Those are in the grantee manual. They're approved expenses. If the participant has requested assistance with that, and your organization has found, okay, here's the child care provider, your organization has to make the payment directly to the child care provider. You need to get an invoice from the child care provider. You make the payment to the child care provider. You cannot reimburse the participant for that child care. You cannot purchase car supplies, say brake pads, for the participant to do their own brakes. It has to go to a vendor, and you pay the vendor to repair the brakes. Right. So a couple of things there just to be very mindful of. Another thing to be mindful of is the use of formulas. So we very often see that here in personnel and especially in fringe. What we can't have, see, we have this $187. We can't have an organization say, well, you know, our fringe is always, you know, 8%. I think that's going to work. The problem with that is that it introduces rounding errors. All right. And so if you're going to use formulas, you also have to use a formula to eliminate any rounding. What we see happen often is that I'm going to just use very, very simple numbers and to illustrate how the rounding creeps up and messes with us. So if somebody said, well, this charge was for $1.75, but they used a formula, and so unbeknownst to everyone else, that's what it looked like. And then that was approved, and it's approved on the PFR. And so the PFR says $1.75 for that reporting period. And then the next reporting period, they do the same thing. And the PFR says, okay, $1.75. The PFR then would total, right? The PFR would total $3.50. But the ledger now totals $3.51. Now we have a big problem, right? And it looks simple here, but when we have 200 or 300 entries on the fringe after a while, it becomes impossible to deal with. You resolve it one time, it pops back up the next month. So we won't accept it. We've tried to manage it for grantees. We've gone in and we're like, oh, this is, you know, and maybe this was, you know, this was 174, 95, right? And so it still looks okay. So we've had to go in and change that to, we've essentially done the rounding manually for organizations to get the PFR and the ledger to match. We're not doing that anymore. If we discover that your ledger has come to us with more than 2 decimal points, we're going to send it back and you're going to have to correct it. Any questions about that? Okay. Any questions overall? Again, I'm going to send you these examples, and you'll have that, and you can always reach back out to us. But I know we have 5 minutes left here. I want to see if any of you have any questions.
Dan, when should we expect to receive these scheduled deliverables?
I'm sorry, what was the question?
When should we expect to receive these schedule of deliverables? Because that was really helpful in submitting.
Yeah, that will come. The schedule of deliverables will come with your executed grant agreement. Okay. For now, what I would advise all organizations to do, again, you're going to receive email with a ledger and a PFR. They're essentially conditional because the official ones, they don't become official until the grant agreement is executed and obligated. But we're going to send these out so that you can start filling them out for January 1st through April 30th. And that way, once your agreement is obligated, you've already submitted the first report. Do you have to? Somebody asked, are we still going to get 30 days? Absolutely. You can wait the full 30 days if you want. But if you want us, one of the things that obviously we're hoping to do here for all of the grantees is to certify your expenses and issue your reimbursement. They're called cash requests within the system and the Office of the Comptroller, and issue those as quickly as possible. So if you send us this information before you receive the actual deliverable schedule, that will enable us to start certifying it and or verifying it so that it can be certified once the grant agreement is executed. And keep in mind, Norman has made sure everyone is fully aware of this, all the program administrators, that the state fiscal year ends at the end of June. And so payments stop. The Office of the Comptroller stops issuing payments mid-June. So that's why we want to make sure we're getting ahead of these first reports and then even your May report as quickly as possible. So
That's great.
Thank you.
Thank you.
You're welcome.
And then for a quick moment, if you could talk a little bit about the funding formula and how that relates to the BFRs, if you can do that in 3 minutes or less.
I'm not sure what you mean, but let's dive into that. We'll save that question for last because I'll stay on and certainly talk to you. But and if someone else has maybe a quick question we can run through, or two others, then we'll definitely come back to that one. Any other questions before we dive back into that?
Yes, I have a question. When is the first report due?
So again, you're going to receive a deliverable schedule with your grant agreement that will explain when all of your reports are due throughout the year, including that first one.
Thank you.
But what we're recommending is that you start to compile all of this information. And you can, once you have January 1st, 2026 through April 30th, 2026, you can upload that to the OneDrive that your organization will be designated with. So you don't have to wait until a due date to submit it. Although it can't be signed, obviously, prior to the end of that period. So none of this could be submitted before 4/30 if you were doing that, in other words. But that's only 8 days from now. Any others?
Yeah, I have a quick question. You mentioned that once you certify it as quickly as possible, will the grantees receive an email that's stating everything is fine, is being submitted to the comptroller, or we would have to check on our own to see if it's there?
Yes, we will send you an email saying we'll send you an email with the ledger saying this ledger from January 1st to April 30th has been approved. And then you use that ledger to build on your May expenses. And then we'll send you a ledger saying this has been approved, and then you use that to build on your June expenses.
Okay, thanks.
Mm-hmm.
Hey Dan, how are you guys handling requests for financial advances from organizations that were submitted?
Those are all being processed kind of in line with the grant obligations themselves. They can't be actually executed until the grant agreement is executed.
Sure. Okay, thank you.
Mm-hmm. Any others before we go back to that budget question? Okay. All right. So let's go back to that budget question. And I got to tell you, I didn't understand it at all. So if you can repeat it, and hopefully maybe Robin can help me out, we can make sure we're understanding your question and then answer it for you.
Of course, of course. So the funding formula is something you mentioned at the very first meeting we had at NIU, and it's also something that's mentioned in the PF and program manual, where enrollment is 25%, and if you only have, like, if your goal is 25, but you have 20 enrolled, so your cost per participant is 2,500 times that amount, and that's the max that you can request, right? Or you can request for reimbursement.
Okay, I gotcha. And yeah, I wish I'd have, we could have talked about this right at the beginning because this is an important point, and I appreciate that you bring it up. So that has that is very only indirectly related to everything we're talking about.
Okay.
So taking a very high level view of the Illinois Works Pre-Apprenticeship Program, there are two things to consider. There's the financial reporting. That's what we're talking about here. We're talking about certifying approved expenses for the grant. And again, that's why I showed the budget a moment ago, because the only things that can go on this ledger, and then ultimately the PFR, are expenses that are part of the budget and part of those approvals. So we're talking about certifying the expenses for reimbursement. All right, so that's one category. Then what you were just referring to is the programmatic performance of a grant. So as an organization enrolls participants, their funding formula for their grant, 25% of that in general, it does, there are some exceptions, but in general, 25% of their overall grant award it goes towards enrollment. We then divide that by the number of participants that they're expected to have that year, and you get a per participant allotment, and so that's done by your programmatic grant manager. They review your work in IWRS, and they say, okay, Sandra Williams, we verified her enrollment, so you're eligible for $2,750 of reimbursement maximum. So the financial grant managers review your expenses and say, hey, we certified they could be reimbursed for $10,000 of expenses. Your programmatic grant manager reviews your performance and says, hey, we reviewed their performance. Their performance indicates they're eligible for $8,000 of their grant. So then we combine the two and we say, okay, we certified $10,000 of expenses, but your performance was only $8,000. So then we'll issue that cash request for $8,000. The $2,000 that we certified in expenses that we weren't able to reimburse will then we'll just wait until the next round of performance evaluation that the programmatic grant managers do. And as you increase your performance, we'll be able to pay off some of that money. On the other hand, if again, the financial grant managers had reviewed your expenses and certified $10,000 worth of expenses, the performance, the programmatic grant manager may have reviewed your performance and said, wow, they're doing phenomenal. We can, during compliance, there's $30,000 of reimbursement maximum eligibility. We call that REMAX, $30,000 of REMAX. Well, again, we look at both of those and we say, okay, there's $10,000 of certified expenses, $30,000 of REMAX. So we can issue the cash request for the full $10,000. $20,000 of performance REMAX just sits there until you submit more expenses that we're able to certify, and then we're able to pay those. So they work hand in hand, but they're indirectly related. They're not directly related.
Okay. Makes sense. Thank you.
Thank you. And that is explained in the grantee manual, by the way. So there's more detail there, and I think there's a video. There's definitely performance elements of the grant videos that we discussed that, including back in the NOFO. Any other questions? All right. Well, I appreciate everyone that stayed on a little late to hear that rambling final answer there of mine. But I hope you all have a great day. Again, we will be sending an email to each of your organizations individually. I probably will send a mass email with just the supporting documentation examples that I had here, but each of you will receive an email regarding your exact PPRs, PFRs, the ledger template, and then we'll also coordinate the OneDrive access. All right. Well, thank you all. Have a great day.
Thanks, Dan.
Thank you.